dropped from around $31 billion in open interest in just, well, an hour or two, about 21 billion. Now take into account that gold has increased over $10 trillion in under 2 years. We've had a little bit of a retracement into the consolidation range that we've been in for, frankly, months, and we're at extreme fear above $110,000. It's pretty mind-blowing. What would really signal to me that the bull market is over is if we see...
Guys, welcome back to the show. Today I have Matt. You should know who Matt is because he's been on the show a few times. And last time we spoke was August, I think it was 15 or 16. And Bitcoin was trading a little bit higher than now. But like we said off camera, we don't care much. But before we dive into it, how are you doing today, man?
I'm great. Thank you very much for having me. It's always a pleasure, always such great feedback and engagement we get after we do collaborative videos. So as always, looking forward to discussing some charts, some data today, hopefully giving your audience some clarification on where we may be in the cycle. I know it's a pretty volatile time at the minute. There's a lot of emotions in the space.
What the hell happened? What do you see in the charts?
I mean, it's a pretty crazy time to be in crypto right now. I mean, this is the current Bitcoin growth since cycle lows. I'll maybe come back to that chart. First, I think we should discuss what's just happened in the past few days. Bitcoin, and well, I should really say crypto, has had one of the biggest, if not the biggest, liquidation cascade, the biggest wipeout of leverage and interest we've ever seen in the market. What we can see from this chart, this is just looking at the 5 biggest Bitcoin exchanges. This isn't even covering all the altcoin space. We dropped from around $31 billion in open interest in just, well, an hour or two, about 21 billion, a huge monumental amount of traders absolutely wiped out, which for those that were overexposed to altcoins, those that were using leverage, it's a pretty terrible day, let's be honest. No one likes to see people losing money. And it's resulting in a lot of people questioning if this cycle is potentially at its end, if we've already seen the Bitcoin bull market peak. And it's a very valid question. If we look at the previous 2 cycles, Bitcoin's 2017 cycle, this blue line we have here, and the previous 2021 cycle, this purple line, we can see they topped out at 167 days and 159 days. So if we take an average of that, we might only be about a week away if we're to align up somewhere with the previous 2 cycles and their 4-year basis from seeing this bull market peak. So a lot of people obviously very concerned, a lot of people becoming a little bit bearish. And obviously if you've lost a lot of money, especially if this is your first Bitcoin cycle, you've allocated to some altcoins trying to get some good returns and now it's all wiped out, it feels terrible. But we need to try and look through that, take a more data-driven, unemotional, unbiased approach to really try and gain a more accurate outline of where we could be in the market. So I'm hoping we can do that a little bit. But yeah, ultimately, it's been a tough week for a lot of people involved.
We were discussing off camera saying, if this has indeed been your first bull run, oh boy, like you must have been feeling it, right? Because if you compare, like you're showing now, you can see that, I mean, technically it is going up, but much, much more slower. And the volatility from both sides, by the way, seems to be less. Maybe the asset, it is changing, it is maturing, right?
Yeah, of course. I mean, it's natural as an asset moves from just a few $100 billion to a multi-trillion-dollar asset. We are going to see diminishing returns. We are going to see reduced volatility. And especially with this institutional influence that we're seeing in the market, if we look at the Bitcoin quarterly volatility here, we can see this massive, crazy drop that we've had that's resulted in billions of liquidations is really only a little blip on the chart. I mean, in terms of previous cycle volatility, this was a pretty normal occurrence. I think just because this cycle has been this periods of choppy, boring, sideways consolidation before these big explosive moves, I think many people have maybe forgotten that Bitcoin is still a fairly small asset. I know I've said it's grown, so we're seeing diminishing volatility, but just compared to gold, which has just surpassed $27 trillion in market cap, in just October alone, it's already gained more than Bitcoin's entire market cap. We are still a small and speculative market, and Bitcoin can have these big, violent swings. And because we have had a more subdued cycle, we call it, and this recent move happened so violently and so quickly, obviously it spooks a lot of investors, but realistically, it still is only a 10 to 15% drawdown. This cycle's been really, really different in terms of how it's playing out with this stepping up in price action. And of course, it's frustrating people. It's causing people to take on more leverage, take on more speculative bets and rotate into smaller asset classes, smaller assets within the asset class to try and maximize those gains. And it's obviously resulting in a lot of frustration. But if anything, this cycle is a little bit more sustainable. This price action isn't based on euphoric FOMO to the upside, isn't this big exponential banana zone, which really we probably all like to see. It's a lot more exciting. It results in considerably more exponential moves, but I think this is a lot more sustainable for Bitcoin and a lot healthier. And even though we have had this big leverage flush out.
Hey guys, I've got some exciting news. November 13 and 14, I will be attending the Bitcoin conference in Amsterdam. If you are coming, please stop by, say hello, let's connect in real life. In the description box, you'll find a 10% coupon. Grab it and get your ticket before it's too late. By the way, if you find my content any valuable, it would mean a lot if you could subscribe to the channel and slap the like button to support my journey. Thank you.
If you just zoom out and look at the Bitcoin chart here, I mean, this is kind of a move that we've seen multiple times already this cycle. It's just the new paradigm, it seems, for Bitcoin, the new institutional asset, which just has these boring steps before big explosive moves. So I think right now isn't a time to be too concerned, isn't a time to be too worried. I know it's difficult to hear that if you've just been wiped out, but ultimately looking at Bitcoin from a fundamental on-chain macroeconomic derivative perspective, it's kind of business as usual.
Whenever you involve different kind of players, the game is going to change 100%. Like if you have a bunch of degenerate retailer, they can enter. Because remember, there is always the illusion, oh, Bitcoin is too expensive, I cannot afford $100,000, right? Whether back in the days when this thing was trading at 500 or even 1,000, even 10,000, it was much more easier for people to get involved, right? And create those humongous wave. And like you said, 10% is 10%. The difference is when the asset is worth $110,000, a 10% will be in fiat terms bigger, right? But in fact, if you look into historical correction, it's the same thing. Of course, the bigger the asset becomes, the more you feel the correction in fiat terms. But if you think in Bitcoin terms, I don't think anything has changed much, right?
No, I mean, we have actually seen a little bit of a shift in the behavior of Bitcoin holders. And again, this is just anticipated as Bitcoin as an asset class matures. But if we look at a data point like the supply adjusted coin days destroyed, so this is a slightly more advanced data point and metric. It's essentially looking at the volatility of Bitcoin. So it outlines here, if I were to, for example, hold one Bitcoin before transferring it after 100 days of holding it, I would add 100 coin days destroyed. And to add the same 100 coin days with 0.1 Bitcoin, I'd have to hold it for 1,000 days. So we can essentially wait out the velocity and try and weight this to long-term larger Bitcoin holders. So the supply adjusted coin days destroyed was a really good job of telling us when not only big participants are beginning to take profit, but those that are the most experienced in the market. And we can see this has actually been declining over the past few weeks. We've seen, even though this big volatile drop, long-term holders aren't taking a substantial amount of profit. They're not capitulating. It seems to be more new market participants and a big leverage flush out. But the market is changing. The market is evolving and adapting. If we look to the previous cycle where this bottomed out at about $9,500 before we had this big rally to up to about $36,000 when this topped out, that resulted in about a 4x in the Bitcoin price to get this amount of long-term holder profit taking. Whereas in this cycle, when we bottomed out at pretty much the exact same place, the Bitcoin price was around $34,500. And when we topped out at again, a very similar price, a very similar place, sorry, the Bitcoin price was about $68,000. So in the previous cycle, this level of price action profit taking required a 4x, whereas this cycle only a 2x. So it makes sense that we are seeing diminishing volatility when people are selling after lesser returns, but it also diminishes the downside potential, especially with the institutional inflows, people kind of constantly accumulating due to having a portion of their portfolio in, rather than retail saying, I want to buy 1 Bitcoin or 5 Bitcoin, etc. Now it's kind of a shift into ETF investors and treasury companies just putting a percentage of their portfolio in regardless of the price. And of course, like I said, this makes it a little bit more boring for retail investors, which has probably pushed a lot more retail investors to altcoins, which is why this recent move feels very painful and very difficult, because altcoins had a substantially more violent and deeper correction than Bitcoin. But ultimately, this evolution in the supply and demand economics of Bitcoin, like I said before, is a little bit more sustainable, a little bit healthier. And I definitely don't think limits our upside potential, definitely doesn't negate the chances of having this big exponential parabolic move. As we can see already in this Bitcoin cycle so far, we've had 5 separate instances of Bitcoin rallying over 65% in under 90 days, which if we were to replicate that from here, which right now feels like it'll never happen again, it feels like the bear market's here, but if we can replicate any of these big moves that we've had in Bitcoin so far, we'd reach $180,000 before the end of the year. And again, right now, that seems impossible. But Genuinely, it can happen. This deleveraging, if anything, might be a healthy event for Bitcoin because typically the market likes to punish the most participants as possible. And the absolute max pain scenario would be having retail participants grind up for 3 years, trying to just scalp small percentages here and there, long, choppy, boring, sideways consolidations. And just before we have this big run up, wipe them all out, allow all of that capital to go into institutional hands before we have this big monumental rise in price action.
Do you still remain bullish? Because you said earlier when we open up with the bull market and the comparison, you were saying typically on average, we should be topping in a week. So I have two questions here. One, do you remain bullish? And two, what would have to happen for you to think that maybe we are indeed breaking free from the 4-year cycles?
It's one of those where it depends on your interpretation of defining a 4-year cycle. So Bitcoin is currently just in the early stage of its most bullish quarter, its most bullish period of price action, which is October, November, December. So would we still say the 4-year cycle is broken if we top before 2026? To me, that would still kind of be within the threshold of a 4-year cycle. And what would make me potentially become bearish, or why am I keeping my bullish thesis, is, again, Bitcoin is primarily driven by supply and demand economics. If we look at the supply of Bitcoin held by long-term holders, it's continuing to decline at a very steady rate. If we look at previous Bitcoin bull cycles, we usually have these very rapid declines as Bitcoin's price is rapidly accelerating to the upside. Whereas this cycle, we've had 3 very distinct peaks where lots of institutions have been buying Bitcoin, lots of high net worth individuals, and then they've been becoming long-term holders. They've been accumulating Bitcoin to hold indefinitely. So the supply and demand economics are definitely more in our favor. And right now, even though we've had this big blow-off, sell-off move, it's not really resulted in considerably more Bitcoin being sold. And if we look at the actual number of long-term holders, because again, this data can somewhat be warped by one whale or just a very small number of large holders really offloading a huge amount of Bitcoin. Whereas we typically see the Bitcoin bull market peaks occurring when many whales are taking profit. And what we can actually see is the number of large holders selling Bitcoin, taking profit, transferring their BTC is continuing to decrease. So even though we are seeing a lot of Bitcoin being sold, really it's in line with what we typically see in a Bitcoin bull market. And we don't actually see higher prices until new market participants coming and are willing to pay higher prices for Bitcoin. So we're seeing pretty typical market dynamics for this stage in a cycle. We're actually seeing fewer and fewer long-term holders begin to take profit, which is more sustainable in terms of how much further we can actually move upside in this cycle. And ultimately, the fact that we've just come down and retested the average accumulation price for new market participants, the short-term holder realized price, this is then looking at the ratio on the MVRV, is really just a moving band of support throughout Bitcoin bull cycles. If we look at 2017, we can see we came down and retested this line on multiple different occasions, usually after a considerably steeper decline. So really, this is just a typical move that we'd see in a Bitcoin bull market. Could we see Bitcoin extending into 2026? Well, potentially. Primarily, previously, Bitcoin was driven by the halving event. Anytime you decrease the inflation rate of an asset by 50%, that has a big influence on the supply and demand economics. But now Bitcoin has become this larger, more institutional influence asset. We're probably going to be moving more in parallel with the traditional liquidity and business cycle. And even though we have had a little bit of a stagnation in the expansion of global M2 money, if we look at the US pivot in the federal funds rate and the typical interest rate declines we're seeing around global economies, I think we're really on the cusp of another great period of quantitative easing. And if we are to see the money printers going once again, then I fail to see how Bitcoin couldn't continue to rise. So I think it's an interesting time. I'm probably more leaning to having a big exponential blow off top before the end of this year. But if we are to see this global liquidity cycle extend long into 2026, maybe we've delayed it somewhat due to the geopolitical tensions because of the tariff wars and everything's kind of on hold for the time being, then maybe we do extend into Q1 or even Q2 of next year. But at the minute, it's just an interesting time to see how the market plays out. And if anything, take advantage of some discounted BTC.
February is the second best month on average for Bitcoin. So, and if you think about the market, like you mentioned earlier, now this thing has been going on for a few years. We've done 4 cycles so far, and it's always the same story. Oh, bull market, bear market, October, November, December, Q4, super bullish, take profit. And then we go into January and February, we dump. Maybe it's too simple. Maybe the people that are now controlling where the money are going are saying, well, what if we mimic a top we do a correction now, which we've seen. We closed the gap. I don't know if you're looking to see any gaps, but there was one in 110, which we just closed literally before we started recording. So now maybe we pump into October, November, and December. December, a bit of a weird month because there's Christmas and it's not fully tradable and people take profit to do whatever, buy gifts or go on holidays. Then we go into January and February. So maybe there could be like a blow off top, like you mentioned. And then people are going to take profit, sell their Bitcoins into the bigger hands, right? And then they'll blow the top back up. People are going to FOMO into it and they'll pull the rug. Possible, right? So again, guys, we don't have any crystal balls. We don't know what's going to happen. Hence why no financial advice. Best thing you can possibly do is buy Bitcoin on a weekly base, on a monthly base, DCA into the asset and forget you have it. And unless you are a degenerate like me, that I'm all in and I'm trying to make sense of all of this, just leave it in your saving, right? Like who cares? Keep it for 10, 12, 15, 20 years for what it matters. Because if you're trying to understand where this goes and if you try to trade, oh boy, I think you will get spanked. Like, look, what Matt just said, 19 billion gone in a span of 24 hours. We are entering into, like you painted, into a different kind of asset class where we just go up, we correct, we go up again, more like gold, because gold has been kicking and historically speaking, Bitcoin catches up.
One thing that I think is very interesting about this market is, of course, the institutions are having an influence as more and more high net worth individuals, more pension funds, more big treasury companies continue to accumulate. It's likely going to change the supply and demand economics. But one thing that I think is interesting in this cycle is kind of anticipating the institutions to have this big control of the market, manipulate everything. And I'm sure there is that happening to some extent. And there's always the discussions of paper Bitcoin, etc. But I think this narrative that the institutions are incredibly smart and know exactly when to buy and sell and are timing the market to perfection is a little bit overblown. What we can do is look at this chart here, which is looking at the 28-day average ETF flows for Bitcoin. Now, of course, everyone who's buying an ETF isn't a large institution. A decent proportion of that will be big players in the market. Now, what we can see is when this 28-day average ETF flow becomes an outflow, they're selling Bitcoin. This is typically marked the exact local bottoms that we've had throughout this Bitcoin cycle. Now, this data is slightly out of date. This is from an analysis piece I did a couple of weeks ago. But I think the thesis that because the institutions are here, we're going to see a hell of a lot of market manipulation and the institutions are going to control everything. Well, there will be an element of truth to that. Institutions don't prevent big blow-off tops. If anything, institutions help exacerbate them. If we look to the 2000 dot-com bubble, the 2008 global financial crisis, the South Sea bubble in the 1700s, all primarily driven by large players. These aren't being bought up by everyday individuals. I mean, if we look at gold right now, is the average person you see on the street accumulating gold and telling you how great it's doing? No, these are big buyers who are accelerating their accumulation of an asset that's already had a rapid expansion. If we look at gold, we can see since 2024, when its market cap was about $14 trillion, to today, it's increased over $17 trillion, a monumental rise in the market cap of gold. And it's continuing to rise. The retail investing, no, it's way overblown. It's gone up too high, too fast. It's overbought on the RSI. These big players are buying into assets that are trending. They're rotating into strength. Now, one really interesting dynamic is if we were to just see a very small rotation of this capital that's gone into gold and other commodities like silver, what we can do is kind of acknowledge that Bitcoin doesn't actually increase in terms of its market cap for every $1 that comes in. So I may not have explained that too well, but within Bitcoin, there's this phenomenon called the money multiplier effect. So if I were to invest $1 of capital into Bitcoin, its market cap actually increases a little bit more than that. So a very simple way we can actually calculate this is if we exclude Bitcoin that hasn't been moved in at least 6 months, it's not readily liquid. What we can see is we just zoom in, this is around 75%, pretty much bang on actually. So if we were to assume that new market participants coming into the market, which may be institutional, maybe retail FOMOing in, if every dollar they buy is having to go into this liquid Bitcoin, the Bitcoin that's moved in the past 6 months, then maybe the money multiplier effect, taking into account only 25% is liquid, is somewhere around a 4x. So every $1 coming into the market would result in the market cap increasing by $4. Now, take into account that gold has increased over $10 trillion in under 2 years. If we see about 5% of that, maybe even less, 4% of that, rotate into Bitcoin, then our market cap would double. And this would happen incredibly quickly. Like I said, if you look at the underlying price action of Bitcoin in this cycle so far, we've already had multiple instances where Bitcoin's gone from $50,000 to over $100,000 in just a few weeks, or from $30,000 to over $70,000 in just a few weeks. All we really need is a rotation of capital from other markets to get this big blow-off move. And again, another way we can really visualize this capital rotating into the market is if we look at the realized cap hodl wave. So this is very similar to the hodl wave, but rather than just looking at the percentage of Bitcoin held by different age bands, we're looking at the influence on the average accumulation price, which again may sound confusing. If any of these charts seem like they maybe need a little bit more explanation, if you go onto the site and scroll down, you'll see the entire kind of definition and logic and calculation behind them. But if we just exclude all of these apart from, say, the 3 months and below, so the newest Bitcoin market participants coming in, we can see that this usually peaks very much these warmer colors as the Bitcoin market is topping out, which makes sense. People who are coming in within the last 3 months or so, paying considerably more for their Bitcoin than those who have been in the market for years, makes sense. Again, supply and demand economics in action. But we've already seen 2 instances this cycle where we've had very notable rises in this metric. And so far, right now, this is still incredibly subdued. Long-term holders aren't willing to sell Bitcoin, as we can see by the number of whale transactions, as we can see by the long-term holder supply. They're not willing to sell unless it's at what they consider to be the right price. And the right price is when new market participants are coming in and are buying at considerably higher levels than they did themselves. So if we start to see the realized cap hodl waves really start heating up, indicating a rotation of capital from other markets, from traditional markets like gold, potentially from equity markets like we see in the US and the S&P 500, then Bitcoin can really, really accelerate to the upside. And just because this is a more institutional driven rally without as many retail participants, I don't think is a hindering factor for Bitcoin given the new market dynamics.
Do you have anything in your radar that is going to tell you this is done, we topped?
Of course. So this is the thing. I'm very bullish, but I try to work in probabilities. I have to acknowledge that there is a chance Bitcoin has already topped this cycle. I mean, it's mind-blowing that we've had this huge liquidation cascade. We've had billions of dollars of Bitcoin being liquidated, lots of Bitcoin having been sold and taken profit, and we're down 12% or so as we film this. It's mind-blowing the resilience and strength that Bitcoin is showing in spite of all this selling, in spite of all these terrible liquidation cascades and bearish news events, that we're still 10% below our all-time high. In previous markets, it would have felt like we'd have had a similar crash to what we had in the COVID 2020 dump, another liquidation flash crash where price dropped 50% in just a few hours, or the FTX dump where again, price jumped massively in a very, very short space of time. If you look at the current cycle, I mean, you can barely notice the current drop we've had. It's unbelievable the strength that Bitcoin is showing. But like I said, I have to work in probabilities. Right now, I'd say that the chance that the top is in is somewhere around 25 to 30%. I think if we were to have a sustained drop beneath $100,000, then of course, that wouldn't be a great look. But ultimately, as much as we'd like to see a Bitcoin decoupling, we'd like to see Bitcoin fulfill its narrative of a digital gold and a hedge against inflation. Ultimately, we are still very highly correlated to US equity indexes, specifically those like the S&P 500. So what would really signal to me that the bull market is over is if we see the S&P 500 really have a period of extended drawdown. If we do finally go into this big global recession, which everyone's been calling for seemingly years now, then that would be a good indication to me that Bitcoin may be coming to its cycle peak. But ultimately, right now, I don't have too many concerns. If you look at the tariff talk that's occurring, if you look at all of the bearish sentiment, really this was a pretty unforeseen black swan event. And if you look at markets like Polymarket, which are trying to look at the odds of these tariffs actually coming into fruition, really it's incredibly unlikely. So I would have liked to see more of a positive immediate reaction in the Bitcoin price, maybe more of a V-shaped recovery that people were looking out for. But the fact that we're still holding around this short-term holder realized price around about $110,000, $111,000 as we're filming this, if we can regain about 114, 150K, 115K, then I remain quite bullish. And I'd only really become a lot more bearish is if we can break down substantially beneath $100,000 and we see other markets again showing more bearish indications.
The fact that we are showing so much strength at those levels, I was telling you off camera earlier, I kind of became immune and I'm numb to all those 5%, 10%, 12%. I don't care anymore. I'm always giga bullish, right? But there's going to be a point in time where like if we do indeed experience a blow off top, okay, I'll be the first one to say, okay, guys, it's getting a little bit warmer, right? Like you said so well, seeing this market topping at 126, I struggle. And even if this was the case, well then, great. Guess what? We won't dump 70% because we didn't pump as much. And fear and greed is like, what, 27? This is nuts. I mean, dude, if this is not bullish, I mean...
100%. This cycle, I think you'll agree, has been frustrating at times. It feels like every single time we make a new all-time high, we've had a constant narrative of the top is in. And anytime we get a slight retracement, we get this incredibly fearful sentiment. Whereas just look at this chart. This isn't a bearish chart in my mind. We've had a little bit of a retracement into a consolidation range that we've been in for, frankly, months, and we're at extreme fear above $110,000. It's pretty mind-blowing that this cycle has been so different. It has felt so different. And a lot of that, I think, has to do with the fact that a lot of people have been potentially overexposed to altcoins. And I'm no Ben Cohen, so I'm not going to go too in depth into the Bitcoin dominance and everything. But if you just look at the underperformance compared to altcoins over the past few years of altcoins compared to Bitcoin, it's been unbelievable how much they've declined. And I think this is going to continue to occur, especially now we're getting institutions coming into the space. The chances that a big fund is going to look at an asset like Cardano, Ripple, that can drop 70, 80, 90% in a few minutes, and they're going to say, yeah, you know what, we do want some allocation to that. I just don't think it's going to happen. If they can look at an asset like Bitcoin, which has this flash crash event, and it's really only down 10% before recovering a few $1,000s, that gives them a lot more confidence that this is a more resilient asset. And like we were discussing, the amount of profit taking we've seen and still remain at these prices is mind-blowing. So this is looking at the spent output profit ratio. And what we can see when we have these big green clusters like we did in 2021, like we did in 2017, this indicates that we're seeing a lot of realized profit occurring on chain. And even in this cycle, it's $74,000, $73,000, this first peak we made last year. This was a sometimes higher peak than we set in the previous two bull markets. And of course, that resulted in a period of choppy consolidation before price doubled in a few weeks. And we had this next phase of huge profit taking before price retraced 20, 30%, our deepest retracement of the cycle so far, which would still put it at the smallest retracement in any of the previous cycles. And then again, we rallied about 50% in a few weeks' time. And now we've had this period of profit taking. But again, we're already starting to see the signs of a local bottom being formed. We're seeing capitulation. We're seeing people sell at a loss. If you look at the funding rates, people are now actively shorting the market. If you look at more short-term signals like the active address sentiment indicator, you can see people are utilizing Bitcoin. People are now beginning to transfer on-chain, use the network. And we're seeing a bit of a divergence in the underlying price action, the fundamental value of Bitcoin. Every single time the active address sentiment indicator this cycle has indicated that we're incredibly diverged from a fair valuation, such as when we're at $74,000. In this 50K region as Bitcoin was chopping and consolidating. Down here when we first retraced about 25K. All of these instances, in hindsight, were obviously great accumulation opportunities, also aligning with extreme fear looking at the fear and greed index, also aligning with people shorting the market, everyone on social media getting incredibly bearish. But in every single one of these instances, we've seen Bitcoin rebound aggressively, violently to the upside in a very short space of time. Now, of course, like I said, there is a chance that Bitcoin has already peaked this cycle. At some point, we are going to peak. But again, to add on to your point, if this was the top $126,000, I don't think there's many long-term holders who are going to capitulate and sell much lower than that. So we probably are going to have a completely different dynamic to the Bitcoin price action, where a bear market might only see the price retrace to $80,000, $70,000 in a much more conservative, drawn-out bear cycle, which really is a lot less violent than what we typically see. To get this big 50, 60, 70% drawdown like we historically see, we're probably going to need Bitcoin to have a bit more of an explosive rally into the end of 2025 to $150,000, $200,000. So I'm not going to say it's a win-win scenario. Of course, I'm bullish Bitcoin. When all of the data starts telling me to become bearish, I'll become bearish. But if we have topped, then it gives us an opportunity to accumulate an asset which has had diminishing volatility in a much steeper decline, in a less steep decline, And if we do have a blow off top, then it gives us the opportunity to potentially scale out at considerably higher prices. So for me, of course, like I said, I'm biased. I'm going to see it as a good either way. But ultimately, I think there's never been a more bullish time to be in Bitcoin, especially when taking a more macro, zoomed out view of Bitcoin and the network fundamentals, how strong Bitcoin looks right now. We're potentially on the cusp of quantitative easing and just fiat debasement globally. We're seeing people rotate into hard assets due to all of the uncertainty going around the world. So if Bitcoin can just slightly take into account a small percentage of this capital, then we could be really on the cusp of something really incredible over the coming weeks and months.
If the volatility is going to diminish, well, then it becomes more attractive to people to have capital, and they say, well, wait a second, now Bitcoin is not behaving like a crazy asset anymore. So a bunch of players, they're going to wait until the volatility is going to diminish a little bit. Any prices you are kind of eyeing on, like 150, 140, 180?
So, as I always like to say, it's much better to react than predict. If you can see lots of people selling on chain, if you can see lots of indications that everyone's getting overly bullish and long, that's usually a good indication that the market's topping out, whether that's at 130K or 230K. But that's a pretty boring answer. So I personally am looking at somewhere between kind of $170,000, 180K maybe, around that region. And I know I've gone on about all these bullish factors and how this time might be different, but I do think everyone is susceptible to human psychology. If you look at institutional investors, just because they have deep pockets doesn't mean they're immune to emotions that impact every single person. And this on-chain data is really just mass psychology quantified. And like you said, people like to rotate into assets that aren't too volatile. And they also, as we can see in gold and other stocks, they like to rotate into strength. So I think it'll become almost like a self-fulfilling loop where if Bitcoin gets a little bit of rotation, starts increasing, people start to get more bullish. I'll put a little bit more in, I'll put a little bit more in. And then suddenly things can get out of hand pretty quickly. So I do think the narrative of this time is different. I think that narrative has kind of existed in every cycle. Last time it was big institutions like FTX. The previous one, it finally we're getting Coinbase listings and the big retail influx. This time it's institutions, but most cycles, of course, they've all been different, but they've often rhymed. So I do think we do see something similar to the previous cycles. And if we can kind of reach that $170,000, $180,000 region before the end of the year, and we get some confluence from some data that maybe we're getting a little bit overheated, I'll definitely be scaling out a little bit.
In Amsterdam or in Abu Dhabi, are you traveling somewhere in those conferences?
I am. I will definitely be in Amsterdam presenting, and I haven't decided about Dubai yet. MENA, sorry. So potentially I'll be there, but will you be in Amsterdam? Because if so, it'd be great to catch up again.
I will be there. I just booked my ticket, so I will be definitely there. Maybe we can even film something over there. That'll be awesome.
100%. Very much looking forward to it. And as always, it's great to have me on the show. If you would like to make this a little bit more frequent and a common occurrence, then anytime, just let me know, especially considering how lovely your audience is, how very engaging they are. And they always show some great comments. Sometimes I get some Ed Sheeran comments, which I'm not too grateful for. And sometimes I get some, I don't want to give them any ideas about some good comments to leave, but if they can leave some funny ones, then I'm all for it. But as I said, anytime, I'd love to discuss data here in person, wherever it may be, because I think we get along nicely. And I think it's a really interesting time to be in Bitcoin with some unpredictable weeks and months ahead. So hopefully we can share this data and just clarify things along the way.
I love that. It should be at least once a month if you ask me, but let me know in the comments. And of course, go and give Matt a follow because your channel is awesome. And I will see you in Amsterdam, buddy. Thank you so much.
Thank you very much for having me. And yeah, I'll see you soon.
Thank you guys for watching. We'll see you on the next one.